Hello and welcome back to my channel Dinar and Dong Updates. The evolving landscape of the Iraqi dinar and Vietnamese dong. A new era for global currency markets. Introduction. The global currency market is undergoing a seismic shift, with recent developments surrounding the Iraqi dinar, IQD, and the Vietnamese dong, VND, sparking intense speculation and investor interest. Traditionally viewed as undervalued and highly speculative, both currencies have seen dramatic changes, with reports suggesting significant revaluations. Some sources indicate that redemption centers and major U.S. banks have started offering rates for the IQD and VND that were previously unimaginable. Additionally, discussions within the International Monetary Fund, IMF, suggest Iraq and Vietnam are making strategic moves toward financial globalization. As these nations strengthen their economies and financial institutions, their currencies may play a more prominent role on the international stage. This article explores the latest developments surrounding the Iraqi dinar and Vietnamese dong, their implications for investors and the global economy, and what the future may hold for these currencies. The rise of the Iraqi dinar, IQD. Historical background and challenges. For years, the Iraqi dinar has been the subject of speculation, with many investors hoping for a substantial revaluation. After the U.S.-led invasion of Iraq in 2003, the country's economy suffered from instability, leading to a significant devaluation of the IQD. Iraq's heavy reliance on oil exports, ongoing political turmoil, and banking sector limitations have contributed to the dinar's struggle to regain its former strength. However, recent reports suggest a fundamental shift in the status of the Iraqi dinar, with increasing speculation about a possible revaluation or redenomination. Increased rates at redemption centers. One of the most intriguing developments is the claim that redemption centers are now offering substantially higher rates for the Iraqi dinar compared to traditional banks. If true, this would indicate a major change in how the currency is valued and exchanged, potentially suggesting that a revaluation is underway. Such a move could signify that Iraq's financial institutions are taking steps toward full international recognition of the dinar. A higher exchange rate at redemption centers could indicate that institutions are anticipating or positioning themselves for a major shift in the currency's global valuation. IMF discussions and Iraq's economic progress reports suggest that the International Monetary Fund, IMF, has been actively discussing policies aimed at strengthening the Iraqi dinar. Iraq has been working to modernize its banking system, increase foreign investment, and diversify its economy beyond oil. Some key developments include efforts to internationalize the IQD. Iraq has introduced financial reforms aimed at aligning its banking sector with global standards. Increasing foreign investment. Iraq has been signing international trade agreements, encouraging investment in non-oil industries, and implementing new economic policies. Stronger currency reserves. Iraq's central bank has been increasing its foreign currency reserves, which is often a precursor to stabilizing or strengthening a national currency. These steps indicate that Iraq is making a concerted effort to position the IQD as a more valuable and stable currency in the global market. Potential implications of a revalued IQD. If the Iraqi dinar undergoes a major revaluation, it could have several significant consequences. Greater purchasing power for Iraqis. A stronger dinar would improve the quality of life for Iraqi citizens, making imported goods more affordable. Increased foreign investment. A stable and valuable currency would attract international investors to Iraq's growing economy. Enhanced trade opportunities. Iraq could expand trade relations with other nations, leveraging a stronger currency to negotiate better deals. However, there are also potential risks, including inflationary pressures and economic imbalances if the revaluation is not managed carefully. The Vietnamese Dong, VND, and its surging value, Vietnam's economic growth and currency strength. Unlike Iraq, Vietnam has experienced significant economic growth over the past 2 decades. The country has become a global manufacturing hub, attracting foreign direct investment from multinational corporations. Despite this, the Vietnamese Dong has remained one of the lowest valued currencies in the world, largely due to Vietnam's controlled exchange rate policy. However, recent reports suggest that the Vietnamese Dong has seen a dramatic increase in value. Some sources claim that as of March 15, 2025, the exchange rate for the VND will be uniform across banks and redemption centers, signaling a shift in how the currency is valued. U.S. banks reportedly accepting the VND at higher rates. Another groundbreaking development is the claim that major U.S. banks have started accepting both the Iraqi Dinar and Vietnamese Dong at significantly higher rates than before. According to some sources, the VND is now valued at an astonishing $39 per unit, which would represent an unprecedented appreciation. If this is accurate, it could suggest that Vietnam's financial standing is improving, with the possibility of the country transitioning away from its historically undervalued currency status. Economic implications of a stronger Vietnamese Dong. A sudden appreciation in the value of the Vietnamese Dong would have wide-reaching consequences. More affordable imports. Vietnamese consumers would benefit from lower costs on imported goods and services. Increased purchasing power. Vietnamese citizens earning in Vietnamese Dong would have stronger financial leverage when traveling or making international purchases. Impact on exports. Vietnam's economy relies heavily on exports, and a stronger Dong could make Vietnamese goods more expensive on the global market, potentially reducing demand. Vietnamese authorities would need to carefully manage these changes to ensure continued economic stability while maintaining their competitive edge in global trade. Global implications of these currency developments. The potential revaluation of the Iraqi Dinar and Vietnamese Dong is not just a localized event. It has the potential to reshape global financial dynamics. If these currencies experience dramatic shifts in value, it could impact trade agreements, foreign investment strategies, and international monetary policies. Effects on international trade. Higher valued currencies could shift trade relationships. Countries that rely on imports from Iraq and Vietnam may need to adjust pricing models and trade policies. Vietnamese and Iraqi companies may face new challenges. Exporters in both nations might struggle with higher production costs, potentially leading to reduced competitiveness in global markets. Impact on currency markets, speculation and investment strategies. If investors believe these currencies will continue to appreciate, there could be a surge in speculative trading, leading to increased volatility. Reactions from other emerging markets. Countries with undervalued currencies may reassess their monetary policies to maintain competitiveness. Monetary policy adjustments. Central banks will need to manage inflation risks. A sudden increase in currency value can lead to inflation, requiring intervention from national financial institutions. Possible adjustments to interest rates. Governments may need to recalibrate interest rates to stabilize their economies in response to currency shifts. What investors need to consider. For those holding Iraqi Dinar or Vietnamese Dong, this period represents both an exciting opportunity and a significant risk. Some key factors to consider include long-term versus short-term gains. While immediate profits might be tempting, the long-term stability of these currencies is uncertain. Consulting financial experts. Investors should seek professional guidance before making any financial moves. Monitoring economic and political developments. Changes in government policies, international trade agreements, and global economic trends will all influence these currencies' trajectories. Conclusion. The reported revaluation of the Iraqi Dinar and Vietnamese Dong represents one of the most significant financial developments in recent years. If confirmed, these changes could redefine the economic prospects of Iraq and Vietnam, offering new opportunities for investors, businesses, and citizens alike. However, with rapid currency appreciation comes the potential for economic instability, inflation, and trade imbalances. Both Iraq and Vietnam must carefully manage their monetary policies to ensure sustainable growth and avoid potential pitfalls. For investors and financial analysts, staying informed about these developments will be crucial in navigating the evolving global currency landscape. Whether these currency shifts represent a lasting change or a temporary fluctuation remains to be seen. But one thing is certain: the world is watching closely.